Hey everyone, let's be real for a second before we even begin. Can you actually score a 60 plus in your CA inner audit exam by just, blindly memorizing the study material? The answer is a massive, absolute no. No way. As someone who's evaluated ICAI papers for years, let me tell you the secret. The only way to score an exemption is by understanding the logical business concepts hidden behind all that heavy technical jargon. I'm going to be your mentor today, and I promise you, by the end of this session, you won't just know the concepts, you're going to feel them.
So, welcome to this complete masterclass revision explainer for Chapter 1, Nature, Objective, and Scope of Audit. We're taking the exact ICAI study material and breaking it down into simple, practical business language. No robotic reading today, just pure conceptual clarity so you can write those exam answers with absolute confidence. All right, let's dive into this.
Here is our battle plan for today's revision. We'll be covering the meaning and purpose of an audit, its relationship with other disciplines, the scope, understanding assurance engagements, qualities of an auditor, and finally, the engagement standards.
Okay, starting right off with Section 1, Meaning and Nature of Auditing. Before we get bogged down in the heavy jargon, we really need to build your core intuition. What exactly is an auditor doing? Well, here is the golden ICAI definition, and let's break it down word by word. An audit is an independent examination. Independent means you have absolutely no bias. You're not influenced by the company's management. It's an examination of financial information of any entity. Now listen carefully here. Whether it's a massive profit-making giant like Reliance Industries or a small local nonprofit charitable NGO, it doesn't matter. Irrespective of its size or legal form, be it a proprietor, a partnership, or a massive corporation, if they want an audit, the core principles remain exactly the same. And what's the ultimate goal? To express a written opinion on those financial statements.
So how do we actually achieve that opinion? As an auditor, your primary job is to ensure the financial statements do not mislead anybody. How? By ensuring 6 critical things. To lock this in your brain right now, remember the acronym ABOCCT. A is for accounts drawn directly from the books. B is for bills and evidence supporting the entries. O means no omissions. C is for clear and unambiguous information. The second C is for proper classification according to accounting standards. And T is for true and fair view. ABOCCT. And guys, here is a massive ICAI exam tip. This specific 6-point list is highly examinable. Do not write generic, fluffy answers in your exam. Use these exact keywords.
Okay, let's lock this in with a quick 30-second revision. What is an audit? It's an unbiased, independent check on literally any entity, big or small, for-profit or NGO, to give an opinion. Your job is to make sure the financials give a true and fair view and simply don't mislead the shareholders. Boom. Concept locked.
Moving right along to Section 2, Audit and Other Disciplines.
Why is this important? Because, an auditor doesn't just sit in a dark room with a calculator. You literally cannot work in isolation. You have to interact with the entire business ecosystem. Audit is positioned right at the center of multiple different business fields. Let's make sense of this ecosystem together.
I want you to imagine you're the auditor for a large manufacturing company. To do your job, you need accounting, obviously, because audit reviews the accounting process. You need law to ensure they comply with all the regulations. You need economics to understand their market environment. You need behavioral science, yes, human behavior, to effectively talk to management and staff without causing a massive fight. You need statistics and math to pick your audit samples and verify inventory. You need data processing, or EDP, because everything is on software now. You need financial management to analyze their ratios and working capital. And finally, production. You actually have to understand how their factory works to audit their cost systems. So don't just memorize the list. Remember the story of our manufacturing auditor.
All right, next up, Section 3, Scope of Audit.
This is huge because you've got to know exactly what ICAI expects you to do, then honestly, more importantly, what you are absolutely not expected to do. The scope includes covering all relevant aspects of the entity and ensuring the reliability and sufficiency of the financial information. You do this through assessing internal controls and doing your tests. But look at what it does not include. This is a super common student misconception. An auditor does not prepare the financial statements. The primary responsibility for the preparation and presentation of financial statements lies fully with the management. Furthermore, duties outside your professional competence are totally out of scope. You can't determine the physical working condition of a highly sophisticated factory machine. You're an accountant, not an engineer.
Let me ask you a very practical question. If management hands you a brilliantly forged factory invoice, can you authenticate it? No, an auditor is not an expert in document authentication. We check the evidence presented to us, but we aren't forensic handwriting experts. That falls completely outside your scope. Which brings us to a golden rule. Audit is not an official investigation. Because of this, an auditor can never give absolute assurance that financials are 100% free from material misstatements due to clever frauds or errors. We only give reasonable assurance. Big ICI-AI exam tip right here. The exact phrase "audit is not an investigation" is a frequent case study and true or false question. Examiner expectations are very strict on this. Always mention that we provide reasonable, not absolute, assurance.
Let's jump into Section 4, Understanding Assurance Engagements.
So let's look at the broader umbrella, assurance engagements. An audit is really just one type of assurance engagement. The whole purpose here is to enhance the confidence of the intended users. Every single assurance engagement involves a three-party relationship. Step 1, the responsible party, usually the management, prepares the subject matter, like the financial statements. Step 2, the practitioner, that's you, the auditor, examines it and provides assurance. Step 3, the intended users, like the shareholders or the bank, read your report and rely on it to make their critical decisions. It flows perfectly, from management to auditor to the end user.
There are 5 core elements to any assurance engagement. To remember this highly important point, think of the acronym CREST. C is for suitable criteria, like your accounting standards. R is for a written assurance report. E is for sufficient appropriate evidence. S is for an appropriate subject matter, like the financials themselves. And T is for the three-party relationship we just talked about. Lock CREST into your memory for the exam.
Now, ICI absolutely loves testing the difference between these two levels of assurance. A reasonable assurance engagement, like a full statutory audit, provides a high level of assurance. Because it's high, you perform elaborate, extensive procedures to draw those reasonable conclusions. On the flip side, a limited assurance engagement, like a review, provides a lower level of assurance. Why? Because you're performing fewer procedures, so you can only draw limited conclusions. High assurance equals extensive checking. Lower assurance equals limited checking. It's really that simple. So, why do we go through all this trouble? What are the actual benefits? Imagine a new startup that desperately needs a bank loan. The bank isn't just going to trust the founder's word, right? They need audited financials to make a credit decision. An audit enhances user confidence, safeguards shareholder interests, acts as a moral check on employees so they don't steal, helps the government determine exact tax liabilities, detects frauds and errors, and reviews the internal controls. 30-second summary here. Assurance engagements build trust between management and users by providing a highly structured, evidence-based written report.
Moving on to Section 5, Qualities of an Auditor. What actually makes a good professional in our field? Well, it's a blend of two things. You need professional qualities. You absolutely must thoroughly know your accounting, standards on auditing, direct and indirect tax, and corporate law. But ICAI stresses that technical knowledge is totally useless without personal qualities. You need tact, a good temper, and most importantly, the highest degree of integrity backed by adequate independence. You can be a total genius in tax law, but if you lack integrity, you fail as an auditor.
And finally, Section 6, the Engagement Standards.
This is the hierarchy issued under the authority of the ICI Council that governs literally all our work. Let's see how our standards build systematically. First, we have SAs, or Standards on Auditing. These apply when you're doing a full audit of historical financial information, like SA 200 or SA 230 for audit documentation. Second, SREs, Standards on Review Engagements. These are for a review of historical info. Remember we just talked about limited assurance? Third, SAEs, Standards on Assurance Engagements. These apply to assurance on things other than historical data. For example, if a company makes future financial projections, you use SA 3400 because it's prospective, not historical. And fourth, SRSs, Standards on Related Services. These apply to agreed-upon procedures or compilation engagements where no assurance is actually given. You need to know this framework inside out for your working papers.
Now, sitting above all of these is the SQC, Standards on Quality Control. This establishes the responsibilities of the entire CA firm regarding its system of quality control. Here is an absolutely vital, important note, and an examiner favorite for MCQs. SQC1 is to be applied universally across all services covered by the engagement standards. Whether you're doing an SA, SRE, SAE, or SRS, SQC1 always applies to your firm. Mark that in your notes right now.
And there you have it, everyone.
We've systematically broken down the entire first chapter. We didn't just read the book. We understood the business logic, the exact scope, the types of assurance, and the hierarchy of standards. So are you ready to apply these core concepts? Remember, as an auditor, you aren't just crunching numbers. Your true role is acting as the ultimate gatekeeper of trust in the global economy. Without you, the entire financial system frankly collapses. Mastering this structured approach is your exact pipeline to scoring 60+ in audit, but it's also the foundation of your professional career. Keep revising, trust your conceptual understanding, and I'll see you in the next explainer.